All right, hey there, Sam with you on Thursday, November 15th. A little behind schedule today, but did some polling amongst our members, and next up by request is look at the euro. Now, one thing, but I need to remind you, my marketing guys will be up my ass here. So just because we went to great efforts to try and put together this trial program for any of you that might be on YouTube watching this here, kind of considered perhaps joining us in the members Discord, but we're hesitant. Right, the front end is, it's not insignificant. So we have this 3-day trial so that you can come in and get a feel for what the community is all about, and just dig around the Discord. We have about 85% of it is available to you in the 3-day trial. We can't make everything available, as I said the other day. Just wouldn't be fair to the existing members, but you'll have enough to where you can make a pretty good evaluation as to whether or not it seems like a kind of community that would be a good fit for you and what you're looking for. So that is an option for you. So it's 3 days for $7. You can find that link underneath it. It's on our Twitter feed, or write to us. We'll make it easy so that you can come in, at least evaluate whether you like what you see in there. So with that said, here let's carry on. So that idea here, some of the benefit that you'll get is typically I record these, I'll make them available for members, and then much later in the afternoon, although I am behind schedule today because we're running live webinars now, so I have to take a break from that to come over here. So we do post these typically about middle of the day, and then we'll put them up on YouTube towards the end of the day. So there is depending on what's setting up, there can be an advantage that is there for you. Now, something like this, I've got the euro up here. This is the 8-hour chart, right? So we did this about 2 weeks ago, and this is just, it's unchanged. Actually, I did take this trade here, but not this. I just caught the last little pop down here. And we had drawn this box, right? And I'll show you why we had that there. So we went, pretty good, right? Just put a toe into the box, and now we've had a decent reaction coming out of that. So I closed it because we hit a target. So we'll get into that. But just looking at the larger, just framing of the market here. So from our 2017 low, it's hard to argue with that 5-wave sequence. And so people tell you Elliott Wave is BS. Put that chart in front of them, all right? And this was technical as well, if I recall. All right, from the 2 to the 3. All right, we're in between the 23 and 38. Here's our target. Yeah, we got a little bit through it, but not bad. So 1, 2, 3, 4, 5, and as with always, you can always, right? So the value becomes, you're trying to get a feel for how the market's responding. So there's the length of the 1 projected from the 4. And nothing to the tick, but it's pretty good, right? There's 200% the length of the 1. So if you don't get parity, here was parity at the 3. We get the 200%. All right, so nice clean 5-wave structure. All right, so just basic Elliott 101. We trend in 5s, we correct in 3s. Well, right, would be nice if it was that easy. Well, what do we have here? Is this 3? All right, is this 3 right there? Well, you can make that case. Right, but it's somewhat suspect here. So if we look at this, you got to throw a few variables here, right? So Elliott is, there are times when it's easier, but something like this, well, we got some challenges here because there's several different ways that this could resolve. So one possibility is we had counted it. We were looking at this as potentially the A, the B, and the C going in down here. So let's. Here, I'll take that up to a degree that you can see here. So that was the thinking. Well, maybe this was A because there's a clean 5 coming down here. Right now, there's some question as to whether or not is this the completion of it, given this very clear ABC that we get, and now we have this action down here. Well, you've got to defer to the dominant swings, right? So from swing low, swing high, we've come down. We didn't quite get to the tick, but pretty damn close, and it may be that algo target that we bumped into there. On an 8-hour chart, is that a front run on the 618? Well, it certainly could be. Right? So and of course, you have this always look left, right? What else is there? Well, we have this little structure over here. That was part of what we were looking at, where we come to a prior area of congestion. Right? You could actually even pull this over to the left here. We get that little pivot. So that's what was helping us define that area as an area of interest, where potential support, or if you were in a short, as an area to be looking for profit. So it becomes a question of, well, if that's the ABC, well, certainly the symmetry is not good, right? So we can get 5, we can get a clean 5 coming down. Right now, there's some question as to whether or not that 5 is finished. But so if this is 1 through 5 and we're correcting, well, if we're thinking about whether could be a 1-2, you know, yeah, sure, this could come down farther. We certainly could have all of this rolling over and going lower. So if you think about the symmetry, well, so the alternate would be that this A is completing down here because of this little ABC right here. So the symmetry actually would, you know, that's awfully deep to be making that kind of correction. But okay, so euro going down relative to the dollar. Well, so one thing I meant to show you this here. Whenever you're looking at FX, you want to be aware of what's coming on the calendar. So we had just a ton of data coming out today for the US dollar. Tomorrow we've got Draghi speaking, which you don't want to watch that because you'll be asleep within 5 minutes. But at 2:30 a.m. Eastern time in the U.S., well, he's speaking. So those are market moving. Anything with a red here is prone to be market moving. You can always come over to Forex Factory. Many of you, I'm sure, know that. Some of you that are crypto traders that are just getting exposed to Forex, this is mandatory. Before you look at any trading any day, you got to see where the reports are. You can't be surprised by something like that. So knowing that you have that coming, says, you know, do you want how aggressive do you want to be here? Well, it's a tough one because you can make just as strong a case that this is complete here and we're starting that the ABC is done and that this was the A, but you can make an equally strong case that this is the 4 of a larger 5 wave. So you're kind of in a difficult position there in terms of a fresh trade. Right? So the trade that I took was pretty straightforward, nothing fancy here. So we had this nice ABC, and then it appears that what we were coming down here, we were in a diagonal format. So we had this move here, looked like it was likely AB. That was technical. Now we know in a diagonal, if we had AB and we were going to finish in a diagonal. So here's the 1, the proposed 1. Here's the 4. So clearly it's some sort of a diagonal structure. We know in a diagonal we look for the start of the 1. Well, let's see. Let me do it this way. See if you can see this here. Let me zoom out in a little bit more. Okay, so we're looking for the start of the 1 wave, which would be right here. If this is AB and this is the 1, well, we're looking for something technical, ideally, between the start of the 1 and the pivot of the proposed 3rd. Right, so here's the trade. So here's the front run. This is just a great example. All right, so you can see this is just algos in action. All right, so I'm going to pull this off. Right, just so you can see this better. Okay, look what happens here. So we come from this. So here's the front run on the 50. They can't get it. They can't get to target. It's not. So what happens? We get a 3 wave. Where do we go? Right to the 618. So you see that? I guess I can take that off if I can get it off of my mouse. So here's the 50. They start selling here. Don't get to target. We come back up. They continue selling, and they will defend right up to the 65. If that's where their stop is, then they'll flip. So if it takes out, right? So you know, I've been over this many times, but for any that are newly watching here, if it gets on the other side of the 65, then they flip. They don't buy it there. Now they'll wait for the next 50. So if you were looking at that swing, and we broke the 65, they take the next 50 looking for that. And they can continue to do that because eventually they get on the right side of it. So you can say here, well, I sold the 50. Oh, I got stopped out. Well, it depends, right? So, you have to know that this is, so, well, let me phrase it this way. So knowing that this may not go to target and you didn't have a great 3-wave structure, this looked incomplete. It looked like from this, that wasn't enough to finish that correction. So the fact that we get this tees up for the sell here. So the idea being that you split your fills. So you put the first one on here. If that goes to target, great, right? You can't complain about that. That's a nice trade here from 114 to 112, 2 full points. Yeah, you're not sad about that. But ideally, you're allowing for enough. If you think about the total capital that you can allocate to this trade, knowing that you could add here. The target doesn't move, but you're adding here. So if you start the first trade here? Let's see. Do I have a short? Let's do it this way. So if I get the short position, so I start here, right? There's the stop. There's the target. Okay, so there's, I'll call it 4 to 1. Right, so there's your 4 to 1 trade. Well, if you know that you've got this potentially here as well, right? Now, same stop, same target. Now you got 18 to 1. Right? 4 to 1, 18 to 1. Right? So you want to try and leave enough reserve capital to allow for you to take that trade so you end up with a split fill. Right? You split the difference between the two. So if you take this off, right? So you're splitting, so you get a split fill. So we'll take this off to the side. So combining those two fills, right, you're going to be right smack in on the assumption you did it in even quantity. You can actually be a little heavier here because the distance to the stop is smaller. Now you've got a split fill. Right, so we bring it up here. So let's split that fill. This is still your stop. This is still your target. Right, now you got 9 to 1. So you had to take some heat on this first one. This, you got it to the tick, split the fill, 9 to 1. Great example of how the algos respond. Just textbook, right? They don't get it here. They defend it here, right? That's what happens there. And oh, they go right to target. Now look at the reaction. So I can't, I could draw these for you, but if you see them in the real market, right? I don't know what more proof I can give you than that. Right? Probably the most technical market, this and the S&P, these are as technical as it gets. Right? Every bank, every hedge fund, every trader is in the euro. Right? So you know it's going to be technical. So there's our algo footprint. Right? Just dominant swing highs. They start at the 50, defend at the 618, they drive it to target. Right? It's not. I had this conversation in our trading room today. It's not a they. We tend to personalize it, right? That's software. Software does that, right? It's not a guy sitting there, oh shit, man, should I take that trade? It's just software does it. All right, so a good example though of that footprint. Perfect example. Beginning, second, target. All right, so how do we know it's an algo? Well, you could say, well, shit, man, everybody knows about that. We know it's an algo because of this. It's not here. It's what happens at the target. Right? Do we get a reaction? That's how we know that's an algo, right? That's God, I should take a picture of that. Like that is the algo right there. Every market, every time frame, every asset class, I don't care what it is, you put up any chart, I promise you'll find it. If you look for it, right? It's always there. It's always, always, always there. Right? At least here we sit in 2018. Now, I don't know that it'll always be there, but right now, there is not a chart anywhere where you won't find it. In any asset, I don't care what it is. All right, that said, where are we now? So is there a trade here? I didn't mean to take so much time on that, but that's a fairly strong example. Okay, so where are we now? Well, are we done? Well, you could make a pretty strong case here that we've got an A, B, C that's completed, but does that finish us? Well, so here's the, let me pull out. So here's the alternate idea. So if this is 3, it actually looks like we end up with a triangle here. Right, upon a closer look, it looks like we get A, B, C, D, E. So that seems to be a good 4 here. So if this is done here, so if this is 3 and this is 4 and we've completed in a 5 down here, it looks like we get 1, 2, 3, 4, 5. So it's hard to argue with this as being done at some degree. The alternate would be that this is 3, 4, shallow 5, then what is this? ABC, I guess you could call it ABC, and we're starting down again for the third of the larger degree. I just don't like it as much. So if we look here, if that's A and this B is in, well then shit, let me pull back out again. All right, so if this is AB, well we know we're looking for a B between the 50 and the 618. So if that A is done down here, well, we're a little shy of it, right? We just barely make the 38. So you're kind of left in a conundrum, right? So do you want to be a buyer here? Not necessarily. I don't know that I'd be looking to buy that because of the lack of the symmetry is not good, right? So maybe you look here and you think, okay, well maybe we know. Oh, shit, sorry guys, I forget to turn that off. Okay, so here what else? What could they be using? Could they be using that? Right? We don't know. We never know until we see what happens at the target. So it's a bit of a, you have no way of knowing until you see a reaction. Right? That's the only way you can know. What we do know is that they'll use the dominance. Right? So that sits at the 38. So you think, maybe that's 3, 4. Coming down for the 5. Well, if that's 3, 4, 5, let's go back out to that, even to the 4 hour. If that's 3, 4, 5, and this is 3, if this is 1, 2, 3, 4, 5, well, that's just the A wave, right? Because we completed, we don't have to wonder about this. We know that's a completed 5 wave impulse. Well, if we're going to correct that in 3, do we have 3? Well, because we didn't break the 65 on that. Let's take this off. Because of the swing low to swing high, we held the 65. You have to defer to the bulls here because that has not broken yet. So the pattern, you're kind of in no man's land here, right? So you're unsure. So is there a trade here? Yeah, you can take that 50. I may take that 50. That's certainly very tradable. Here I'm on a 4-hour chart here. Swing high, swing low. That 50 will be of interest. And you can see here all of this prior support here lining up for that resistance. You should pull this off to the left here as well. Even if you did that. So you got a big fat zone here this is very tradable. Very tradable looking for that target. There's nothing wrong with that. What would that do to this count? Well, maybe we're just 1, 2, 3 is going in, 4 and 5 still yet to come. So there's not enough here to be a buyer, even though we were a couple ticks, we looked, it was pretty close to that 618. It's not enough for me to want to be a buyer there. Even if we go down to the hourly, you think, oh, well, maybe, do I have an impulse there? Well, do I have a good 5-wave structure coming off of that? Well, you got to really dig down. I'm all the way down to a 60-minute. Maybe you can make a case here that you've got 1, 2, 3, 4, 5. So you got 1, 2. Yeah, actually, I would do it this way. Maybe you've got A, B, C going in. Much on the degree. Let's go sub-micro. Maybe you've got A, B, C. I wouldn't operate on the assumption that the correction is complete just yet. Even though we can make the case for the A, B, C, this doesn't look like enough. The symmetry just has me leaning into the idea that we're not done yet. The length of time and the range of the C relative to the A is just not good enough yet. Now we're coming back here. This not uncommon for the A wave, right? That could be our A. Not uncommon for the A wave to come to the first 50, right? So just as we saw it, right? We saw it over here on the one that I was showing you where they had so it was this one here. So this was the 50, this was the 618. So coming up here, without more sense of where we are here, this could easily go higher, but we may get a reaction here. So if you get that reaction, is that tradable? Yeah, that's tradable. Look here, you've got all the same setup here. And you got all of that lining up at the 50. So there's nothing wrong. That's a very reasonable trade. We know the target is down below. Nothing wrong with that. But in the context of the pattern, right? So what are we trading, right? So the idea would be that that's the A, B, and we're going for the C. All right, so we'd go A. Are we going to go all the way down? Right, that changes the count. So if this is B, you're trading the B. You're trading for the B. So the assumption would be that if we're going to go up to this 50 and get the pivot here, if you want to take that short, well, then you got to be very conscious about if you get the pivot there. Let's say you get the pivot. As you come down here, knowing that a B can go anywhere from the 50 to the 786, you sure are going to have to be watching for signs of that turning before you make the assumption that you're going all the way down here to this target. All right, you certainly could, but I would be watching for. So my targets would be more. I wouldn't anticipate beyond the 65 here. So the benefit here is we're going. So I'm now here on 1 hour. So from swing high to swing low, there will be an algo. There will be software participation here. Just because they participate, right, doesn't mean that they can't get through it. But note here. So if we get the pivot down here and this becomes our path, let me get this off of here. Look where the target is. You can't even see it because it's on top of it. Right, so if I drag this, do you see that green line here? So as I bring it to the pivot, now we don't know that that's the pivot, but if we get the pivot there, then we're getting our target right on top of the next golden zone. So really, you'd want to be thinking about this in terms of this range. So who's going to win? So you're going from one golden zone to the next golden zone. Right, so here was the first tag of it. Right, so we're just in that range. So there's not a, I like to give you a trade here. So yes, there's a trade here. You could trade this 50, but I would be realistic about, I wouldn't be shooting for fresh lows. All right, if you got this from this 50 to this 618, there's nothing wrong with that trade. 1350 to 1270, almost two full points. Right, nothing wrong with it. Right, so I would be cautious about trying to trade in here beyond any of these ranges until you see one of these 65s break. Right, now, if we get something, if we get a pivot up here, you have the potential to be adding now some market geometry. So that starts to look like a reasonable candidate here. Right, so that's kind of what I see here. This just does not look like it's enough relative to all of this for that to be done. This doesn't look like it's done. So if that's the larger B, this is the A. I guess I got to go back all the way out to the 4 hour. Right? Just kind of conclude with that point. Even though we didn't break the 65, the length of the A relative to the length of the C from the B, just that symmetry is, all right, it's certainly possible that the C is in, but it doesn't, I wouldn't trade that, I wouldn't make that assumption. All right, so are there some swing trades in here? Sure, right? Any one of those 50s and 618s, very tradable. Right, you will see reaction there, but shooting for new lows, I'd be a little bit more conservative with my targets. All right, so with all that's, yeah, so I would encourage you to consider those swing trades, but in terms of the larger cycle of where we are in the ABC, I want more information, more clarity. Right? Market's not going anywhere. Euro will be here once we get a little more clarity. These are big swings, big moves. The whole idea in FX is you want to get positioned for one of these very big swings. If it's unclear, you're better to trade the internal swings rather than say, okay, I've got the B and we're going down to fresh lows. Not quite that clear just yet. All right, guys, I'm going to wrap it there. Okay, don't forget that 3-day trial, and right, you can always find more information in the links underneath this video, or always write us on, you can DM us on Twitter, or follow us over there. We'll keep you posted on anything new that's going on. With that, I'll call it a day.